Right, so earnings were declining as expected. It's not only slightly lower oil prices, but mostly the self-imposed OPEC plus cuts, right? So we had 9 million barrels a day. And also SABIC contribution declined because of weaker refining margins and chemical margins. So this was explaining the drop. Obviously, the oil prices continue to be very favorable in the low 80s. That's supporting the financial position. Gearing is around 12%. So obviously they continue to be committed to very high dividends, and that's ahead of a potential stake sale. That's probably going to be reduced from the 20 billion that was mentioned earlier. We also think production can increase maybe by 500,000 barrels for the second half as global demand remains healthy. We're talking about a 1.7 million barrels increase in demand, and probably a non-OPEC plus supply increasing by 1 million. So there's an increased OPEC plus call that Saudi Arabia can partly fulfill. Yeah, the dividend commitments is obviously quite supportive, 124 billion as you talked about, which comprises base dividends of 81 and the remainder being the performance-linked dividends, which are committed for 2024. Over time, we expect the dividend yield to be slightly less than the 6.4% handle. Nonetheless, I think this is supportive for the shares.
So walk me through what all of this means for the company and the kingdom, because we know that Aramco's earnings are critical for financing the government's Vision 2030 agenda. As you say, total dividends this year are expected at $124 billion, but the total spending on Vision 2030 projects, including NEOM, is estimated at $857 billion. That's according to S&P. And if you take a look at a list of some of these big spending commitments, it's pretty clear here that there is a spending gap. So do you expect the Saudi government and the PIF to ramp up debt issuance to meet some of these financing commitments? Can petrodollars do this alone?
No, it's not going to be just coming from petrodollars. So obviously the capex reduction is welcome. They're saving about 40 billion over the next 4 years because they're no longer committed to increase the oil production from 12 million barrels to 30 million barrels a day, given that they're at around 9 now, right? So that makes sense to kind of prioritize that. Nonetheless, capex continue to increase because of the gas expansion. They're still targeting 60% growth by 2020-30 versus 2021. Also priorities on blue hydrogen and ammonia. And obviously there's also new energy sources such as the solar plant that just became operational capacity. So capex continue to increase. Obviously there has been some reprioritization. Some of the ambitions are deferred, right? Particularly regarding NEOM. But the original targets are kind of deferred by 15 years for that project. And for Riyadh, which is actually more interesting in terms of theme as for investment purposes, the population will grow by 50% rather than the doubling that was earlier announced. So I think things are still very encouraging, but obviously this has announced the feasibility and the financeability of the projects, as Saudi is around the fiscal break-even at the current levels. That level is obviously low. PIF has substantial resources, but obviously outside sources are important to finance all these ambitions.